Hi, welcome to this video, Dave, which is on the 10th of November. It's Sunday. Just going to be looking at two Forex pairs today in relation to trading off really big support or resistance levels. Now, two pairs we're going to look at today. Let's look at pairs. They're probably on the trading platform. The USD CNH, so US dollar against offshore spot Chinese yuan, and USD SGD US dollar Singapore dollar. Now, what I want to do in terms of these pairs is look at techniques for keying off really big levels, and US dollar has corrected back to really big support levels. Now, the reason that it has is because the market is full of optimism about a US-China trade deal. Now, in terms of obviously the Chinese yuan will do well on that, and the Singapore dollar as well, because Singapore big exposure to China, but the dollar is holding key support. We think the optimism about the trade deal and everything ending amicably between the US and China fairly soon is misplaced. Even if our view is wrong, the market is seeing a happy conclusion, so is it in the price. In terms of trading off these big levels of support, I think both trades look good risk to reward. Just going to go through some simple techniques if you're interested in these pairs, and just keep them in mind for other pairs you come to big support and resistance levels as well. Right, let's go to the charts, but please do keep in mind it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, just simply click on the link beneath this video and you can get live access to our member center. Right, first chart is going to be USD CNH. Right, USD CNH chart. I'll do the technicals in a moment, but first of all we've got to look at the sentiment behind the charts. And in terms of USD, it's fallen pretty hard, and the reason for this is optimism about a US-China trade deal, de-escalation, a truce, whatever you want to call it, of the friction between the two nations. And this is a typical quote we saw on Thursday in the media. It comes from Reuters. China and the United States have agreed to roll back tariffs on each other's goods in a phase one trade deal if it is completed, officials from both sides said on Thursday. Now, the market takes that everything is great. Two sides are going to reach agreement. Have the US has not agreed to the above? It would be a complete back down from Donald Trump. And he can't completely back down and kind of concede defeat to the Chinese. Now, in terms of the US side, this is a good quote here from White House trade advisor Peter Navarro. He said there is no agreement at this time to remove any of the existing tariffs as a condition of the phase one deal. They're just negotiating in public, i.e. the Chinese, trying to push this in a direction. So the Chinese are trying to put pressure on America. Hey, let's solve it, okay? But on the US side, they cannot back down, in our view. US President Donald Trump told reporters complete rollback was off the table, okay? So the market's got a little bit too optimistic about a trade deal. I just don't think the sides are going to agree. There's all this talk about where they're going to sign the deal, but there's no venue yet, is there? Okay. Now, in terms of this candle here, I've marked it big blue. That was on tariffs being levied. You had the build up and then the big blue back up, come down. Where did we come to? Came to the bottom of that blue candle, effectively. Sorry, just trying to get my line straight. There we go. So basically, you do poke through the bottom of this big blue on that red tail there, yeah? But you rebound back to the level. Then on Friday, you get a smaller tail down. Can't get to that tail, finish blue. So, trade wars market just got a little bit too optimistic. And just think now we'll see a snapback. So if you wanted to come in fresh, trajectory, psychological 7 level there, through it, then you can see if she runs. Okay, now in terms of where would you put your stop, it needs to be really clear of this tail here. You can see I've just drawn there's some more candles there that were resistance where we came up, we pushed on anticipation that the tariffs were coming, get through, then up. Okay, so this level here, stop back behind the tail, well cleared the tail. She comes through. You can see as she runs. I personally think we do start move up pretty quickly. And my own view is we could get back to chart highs, but you can manage the trade as it goes. I think if we go big blue through this level, then you can bring your stop up, manage the trade. But yes, decent risk to reward, clearly defined levels of support. And I think you're going to have, the United States effectively kind of cave in a bit next week for the US dollar to fall through that second support level. So looking for a push up to chart highs. We'll see what happens. But I think if we do start moving above resistance, we get nice big blue, we should quickly follow through to the upside. Just manage the trade as she goes. Next pair, USD SGD. All right, chart of USD SGD daily, just before I draw my levels, just a bit of background to the Singapore dollar. Singapore as an economy, very exposed to China and global trade. It's heavily export orientated. I think it's the second most exposed economy to global trade. So you've got a bit of optimism about a trade war truce. It helps the Singapore dollar push the USD down, but you can see the candles have now slowed up in terms of volatility. We're going sideways. I think, if they do move towards a trade deal that's kind of in the price, the USD is oversold on the SGD, it's going up anyway. If the optimism evaporates about trade war truce, that'll push the US dollar up even quicker, in my view. And in terms of a key level of support, it's here. So that is a key level, okay? Now, in terms of candles, they're moving sideways. I haven't got near this level. Second level support is there. Okay, why is that second level support? Because it's really the move, or the start of the move of the USD up to the 139 level, this blue here, okay? And you can see we've come down, poked at it with the tail, two tails through, but back above, blue, red tail goes through, blue tail can't get to the red. So I can draw a trajectory in there. Probably don't need it, but there we go. Finish blue on Friday. So you just need a little bit of confirmation to go long. You can see what's happened. You've got candle pokes through the round number, but not following through. Get above the 136 level, then I think we'll be off to the upside. And in terms of when you enter the trade, or if you wish to enter the trade above the 136 level, keep the stop back behind this level. Okay, see if she runs. You can bring the stop up. I'll show you where I think you should bring the stop up in a moment, but our target is a move back to 139. Longer term, we think the dollar could go to 144. So plenty of upside. If we poke through this level, take out this 20-day moving average and these candles here on the right, on the left, then the stop could come up behind this first level. But nice risk reward trade, about 4 to 1. Just keying off two big levels, and you're looking for sentiment to be discounted in the price. I'm not sure if I said it earlier, but the USD has got oversold a lot of pairs, and this is just one. There's plenty more, okay? So if we go through the level, looking for higher volatility and follow through to the upside, a bit like we did here, okay? A sort of more vertical move to the upside. We'll see if this one comes to fruition, so to speak, but I think both trades are good risk reward opportunities. So that is the video for today. Thank you very much for watching me. We'll update these pairs in our weekly forecast or future video. Thank you.